Hello, everyone, and a very warm welcome to today's Major Markets Update for Friday, January the 19th, 2024. You probably wonder, why is he not showing the slide from our last webcast? Well, that's because I still don't have actually any buy signals. That's quite interesting. I don't think there's some buy signal on the MACD, neither on the summation index, neither on the McClellan oscillator, neither on the PMO buy all sell all indicator. That starts to suggest that we're getting closer to a final move, but it's not done, for sure not, than a initial move. So we have now confirmed the wave 1-2 setup. Thus, we are in a impulse. Force times time, with time being, of course, the difference between the final and the initial start times. This is where we are. Impulse higher. This is what we've been tracking. But before I go there, I want to go over yesterday's update. All right. We had the futures chart and the hourly chart. All right. The hourly chart, in this case, the 65-minute chart, because it gives 6 equal bars instead of a 60-minute chart, which gives a unequal number of bars, meaning the first bar is only 30 minutes. So with the 5-minute chart, we could count 5 waves up, and I would have liked to see a little bit deeper wave 2. But knowing that we are then at the starting gates of the third wave, please remember that then the pullback is going to be quite shallow. Shallow it was. However, the Nash of the cash chart aligned with the futures chart in that it would look better with a small 5, then a pullback for the wave 2, and then higher. However, the S&P 500 cash chart already showed that we had completed a wave 1 and wave 2. Now, hindsight is 2020. Had I aligned the S&P 500 with the NASDAQ 100, etc., then it would, of course, also aligned the NASDAQ with a third of a third wave. But for the S&P 500, we said the impulse up from yesterday's high remains our preferred point of view. So that we got correct. And we are going to look for orange wave 3 to 48.30 plus or minus 5. Where did we get? I think we topped at about 48.40 today. Pretty darn close. Okay, so this is then the ideal 100% extension of wave 1 measured from wave 2, which is a typical third wave target. But we can also reach the 123.6 or the 138.2 to be determined. That we don't know beforehand. We start off with the 100%, and it looks like we're now going to the 123%. More about that later. So yes, I would have liked, of course, to have the NASDAQ 100 aligned as well, but I think I have a good solution for it. And, our go-to chart is the hourly chart, and once in a while, the 5-minute chart is the one that's correct. Why? It is a matter of interpretation, and the hourly chart doesn't give us that interpretation. I'll show you how we can resolve that. So this was the 5-minute chart. I was looking here actually for an A and then a B and then C lower to about 16,700 and then a rally. Okay, so that is what we were looking for originally. This would have been really nice. Well, we didn't even get it. I remember I was emailing back and forth with somebody who said, well, if your intention is to short this market, I wouldn't do it. I would rather look for a buying opportunity. And I hope the person didn't short because you would have gotten your face ripped off, as we are now in the third of a third wave. That's what I literally said. We're in the cusp of a third wave. So shorting is not the right strategy. You have to look at any pullbacks as a buying opportunity. Well, once again, the futures market did disappoint, and off to the races we went with good follow through in the cash market. So unfortunately, we did not get a 50 to 62% retrace, which is what we typically look for. And all we got was a 38.2% retrace. And again, in this case, the 5-minute chart was correct, and the hourly chart was incorrect. And so was the futures market. And the futures market counts different than the cash market. And I'll show you this in a minute. So this would look better like a 1, 2, 3, 4, and then a 1. Why? Because we kind of bottomed here. It is maybe hard to see, but if I zoom in, we bottomed here at the 38.2% retrace intraday. That's typical for a fourth wave. Wasn't too bad at all. Okay, that looked pretty good to assume that. And I just wanted to make sure you understand the reasoning behind our wave count for the NASDAQ 100. But we did have the 1-2 set up for the S&P 500. Okay, 1, 2. And here again, we had a nice 50% retrace here in orange of the orange wave 1. A completed ending diagonal C wave as well. And as that, we are now looking for 4830. That's the typical 3 of 3 extension, possibly a little bit higher at 123.6. Let's go over that in a minute. Once again, the market bottomed here in this ideal C wave target zone. I know it's quite large, between 47.45 and 47.05, 70-point range. Why is it so large? Because we don't know if C will be A or C will be 1.618 times A. It got very close to 1.618. I believe it was 1.5. Well, that's what it is. And that we just don't know beforehand. That's where we go by. And again, we also bottomed here in the ideal retrace target zone, which is often between 50 to 76.4% for a second wave. Quite normal. Quite normal for this wave 2 as well. Orange wave 2, 50%. So we now are in this orange wave 3. This is the NASDAQ 100. All we got was a 38.2% retrace. I apologize. I prefer to, of course, to go 50, 62%. That's typical. But it doesn't surprise me that we only got this little of a pullback, as this is the heart of a third wave. So how can I resolve this then on a hourly time frame? Okay, I want to align it. On an hourly time frame, we could count this as a failed fifth wave. They went 1, 2, 3, 4, 5 waves lower. Okay, it works because on a closing basis, this hour was lower than here. Okay, so then we have indeed 5 waves lower. And then 1, 2, 3, 4, 5 waves up for this wave 1. Yesterday's intraday pullback was then wave 2. And now in wave 3, and in orange are the Fibonacci extensions for the wave 3 target zone, with an ideal target somewhere around 17,370, 17,400. That would be nice overlap. We're getting extremely overbought, but that's a sign of strength and not a sign that the market is about to crash. It's more about that for the S&P 500. After 3 comes 4, after 4 comes 5, that would complete 3. As you can see here, orange wave 5 has an ideal target zone of 70,541 to 70,638. The 200% extension gets very close to the 161.8% extension in gray. 70,645 versus 70,638. That is a classic third wave extension and a classic fifth wave extension of the third wave. So I expect this pattern to unfold, a pullback back to about today's levels, and then a final wave 5. Okay, so the S&P 500 worked out really well. 1, 2, and we're now in this ideal wave 3 target zone, which is between 48.30 and 48.58. Should see a pullback for wave 4, wave 5, etc. Okay, so that's what we're going to look for. See this? Getting very close. Now I want to show you here the December rally, how overbought things got. And we're getting close already, but we can't get even more overbought. So to about 48.60 wouldn't surprise me if that's the case. The first warning level for the bulls is now below 48.03. The second warning level is now below 47.86. The third warning level is now below yesterday's low, which is at about 47.40. And the final warning level is below 47.14, this low here. So then we had wave 1. This was a leading diagonal wave 1, ABC of a expanded irregular flat wave 2, and now in the standard impulse. I like it. So far, so good. With an ideal upside target between 49.19 and 49.47, potential a little bit higher. So 3, 4, 5, 4, 5. This is the path we're going to look for. Okay, so ideally a little bit higher. It doesn't have to. Okay, a little bit higher. Then we drop back, and then we rally one more time. Okay, in that target zone. And then we drop back one more time for gray wave 4, and then one more time for gray wave 5. And then we're getting so awfully close to a big fat top. I really would once again argue to reassess one's portfolio. Remember, we topped out here at 4,800 in December and January, and so far we're only 40 points above it. This monster rally so far, on a bigger picture point of view, hasn't done much. We're only up 1% compared to our last December. And I think we're going to add about another 150 points, something like that, 160 points, maybe 200 points. Let's make it 200 points. It's still only about 2.5%. That's it. So please take that into consideration. So back then to the NASDAQ. Okay, so we've confirmed the wave count with the S&P 500. On the hourly time frame, I will label it as a failed fifth wave, 1, 2, 3, 4, 5. It's a C wave, so it should be 5 waves. On the 5-minute chart, we can label it as a 1, 2, 1, 2, 3, etc. It's fine. So now things are aligned. So we're going to look here for 70,480, ideally. So this is what we're going to look for this wave 3, 4, 5, 4, 5. 3, 4, 5, 4, 5. So on the daily chart, sorry, time frame / chart, we are now in gray 3, gray 4, gray 5. The 176.4% extension, okay, it's not here on this chart, unfortunately, targets almost exactly the green 200% extension, which is the typical fifth wave target zone. So the fifth of the fifth wave has 176.4, which matches the 200% at about 70,713. So this is now the pattern we're going to look for, 3, 4, 5 on a daily time frame. I expect a pullback soon, just an intraday pullback. Could be a little bit more, it's fine, but it should be, you know, a couple of 100 points on the NASDAQ 100. For orange 3, orange 4, orange 5, gray 4, gray 5. This is going really rapidly, and all of this can be wrapped up in about a month or so. That is my ideal time frame. So here we have the warning levels, right? First warning below 60,900. Let's actually raise that warning level. I would like to raise it. So we had the breakout. First warning level below today's low at 70,040. Second warning level is then below yesterday's low at around 60,800. The third warning level is then below this week's low here, the wave 2, at about 60,555. And the third warning level is back below the January 5th low. So once we reach this height, okay, nothing out of the ordinary. We've had this on the map, so there's no surprise. There's no surprise. We were looking either for 3, 4, 5, or, for example, for a larger B wave. We didn't know it just yet, and the market decided up it once. All right, up it goes, up it once. Then that's what it does. It really wasn't necessary anymore, but this is what the market decided to do. So be it. So this is still the nice third wave. Bollinger Bands are expanding above the 20/50 200 day. Good strength. This looks still very good. Now the MACD just gave a buy signal today, but I think we're going to get some nice negative divergence on this one as well. Okay, to start signaling that we are reaching a larger top, just as we did here, for example. See this, right? It's kind of the same pattern. And this one took 1, 2, 3, 4, 5, 6, 7 days to complete. So this can go really fast. Okay, I just want to point out this can go really fast. So don't count your chickens just yet. Again, so if we are at 70,314 and we're going to go to 70,700, it's about 400 points upside left in the NASDAQ 100. So we have good overlap on the minute time frame in gray with the minor time frame in green at 70,700. Make it 70,714. Okay, 70,714 minus where we are now, 70,314 is 400 points upside. Okay, divided by 70,314 is 2.3%. Please keep that in mind. Okay, from a bigger picture perspective, option trading, shorter term, plenty of money to be made. It all depends on your time frame. For example, I got a tweet where somebody or a reply to a tweet of mine or a post on X, whatever you call it these days, on what you should do on a breakout or a breakdown. I don't know. It depends on your time frame. It depends on your risk management, all those things. It's really inappropriate question because you should not be in the market if you don't know what you're doing. If you don't know what you're doing, then why are you in the market? You can't drive a car if you don't know what you're doing. You can't participate in traffic if you don't know what you're doing. You can't do your regular job if you don't know what you're doing. If you're a lawyer or a surgeon, or a banker or whatever. If you don't know what you're doing, you should be doing it. Very simple. Same for the stock market. If you don't know what you're doing, you should be doing it. Educate yourself. So it's a rant, but if you just let me do your job, you think, oh, he will do it for me. That's not the way it works. You need to know also what you're doing. If not, you should not be in the markets. First and foremost, I see too many people that are not willing to educate. Regardless, 70,714. Let's go for that one. Okay, so we're ranging from 3, 4, or 5. Similar for the NASDAQ. Similar, same NASDAQ. Usual NASDAQ. Sorry, getting a little tired here on Friday. 3, 4, 1, 2, 3, 4, 5. Okay. Now, as you know, we topped out here exactly at the 200% extension. So technically, this red wave 5 had done enough. They didn't have to do any more. That's why we said we can consider this red wave 5 complete. It's done enough. There were technically enough scribbles in place, but we knew we had this option here for green 4 and then another green 5. A massive subdividing red wave 5. All right. Now, again, look at where, if we do the 200% extension, it's not on the map yet, but I'm going to do it here in blue. If we add 100% to 100%, we get 200% extension. Okay, look where that one targets, 50,911. The 238% extension is 50,902. That is off by 9 points. So that is the 200% extension for a green wave, of a gray wave 5. In this case, green is fine, whatever color you want to give it. Okay, so that's where we're going to go for. We're going to go for about 50,900 on the regular NASDAQ. And then we're going to redo it again. Is this wave 3, question mark, or not? Are we going to get a larger pullback? Is this wave 3? Or is this the top? To be determined. Are we then going to see a larger pullback? Probably back to this digestion zone here around 14,200 plus or minus 200, and then another 5? Very possible. Okay, so moving on again to the S&P 500. So we've covered the NASDAQ, we've covered the NASDAQ 100, and back to the S&P 500, which we showed you as a narrative for the NASDAQ 100's failed fifth wave, or the 5-minute chart allowing for the 1-2 setup already, with a quite shallow orange wave 2, which was 50% on the S&P 500, quite typical, only 38.2% on the NASDAQ 100, quite weak, but also rather typical for a third wave setup. Orange wave 3 underway, as I said, to 4830, 4860, orange 4, orange 5, 4, 5. Okay, so this remains our pattern to the high 4900s or low to mid 4900s, potentially a little bit higher. Depends all how much of an extension we're going to get. Here you see the December RSI 5 readings, so we can still go a bit higher before we see decent pullback, a rally, and an even bigger pullback, etc. Again, remember, we're still only 40 points above the recent uptrend high at about 4,800. On a daily time frame, it looks like this, right? 3, 4, 5. Picture perfect 62% retrace for this wave 2. Honestly, looks really good, or 76.4, whatever it was. And we should now again target somewhere in the 4900s. In black, red, and green are the green wave 5 target zone, the red wave 5 target zone, and a major 5/3 target zone. So again, we are still well within this massive topping zone. Okay, I want you to know that. So we're getting awfully close to 3, 4, and 5, similar as what we saw here. 1, 2, okay. And then the wave 3 was, well, let's see how many days. 1, 2, 3, 4, 5, 6, 7, 8, 9 days. And we're already 3 in. So this can be done real quick. Okay, all in all, this was maybe 2 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 3 weeks. That's it. Took 3 weeks to reach this top. 3 weeks from now gets us into early February. Please keep that in mind. Mid to early February. Can top there. No buy signal. Okay, classic, I would say, a larger fourth wave setup. No buy signal. Probably by the time we get a buy signal, we're getting already close to topping. So this one again starts to look for the low to mid 4900s, potentially high 4900s, low 5000s. Low 5000s, here 5026, brings me to this bigger picture wave count. Again, no surprises really. We've had this option. We had this option, right? We've had this option, 3, 4, 5. Okay, that's why I was looking for this larger wave 4 potential pullback and the larger B wave. Don't like it anymore. I think that is off the table. So we're going to now look for this wave 5 of 5 of 5. 5,026, 5,048 matches quite nicely. 5,026, 5,026. Here we're getting close here, 4,900. So please, once again, please keep this in mind on the bigger picture. That's all I'm saying. It won't hurt to raise stops and all those things. So more about that as well for what other people are seeing. I'll share it in a moment. So we have our warning levels played out. Today's low is the first one. Yesterday's low is, of course, the second one. The third low at Wednesday's low is our third warning. And we can raise now the red level to this wave 4. Okay, that's our red. First warning, today's low. Second warning, yesterday's low. Third warning, the wave 2 low. Final warning, below the green wave 4 low. So still think we're going to go higher. We have our target zones all nicely mapped out based on a standard Fibonacci-based impulse pattern, and I will have to see if the market's going to adhere to it, yes or no. I don't know yet, to be determined. But that's all we can go by. Now, this one I had to revise as well, unfortunately, semiconductors. It had the potential to already have put the larger fifth wave in place, but apparently people are extremely bullish on artificial intelligence. It is going to save the world, or maybe destroy the world, whoever you talk to. And also here, we're now in a nice impulse. I do want to point out my ETF trading alert service went already long yesterday. All right, same on the semiconductors, S&P500, NASDAQ100. And we're long now also the Dow Jones. All pretty good. We just got stopped out initially here, back on it again. It happens, stopped out for small losses, back on it again to remake all those losses. So this one is now looking for about 4,500 on the semiconductors. And by then I'm starting to run out of waves to count. IWM, question mark 4. Again, I don't like this wave 4 low here. It's deeper than ideal, but okay. We also failed a little bit here at 161.8. It's hard to see, but we can allow for it. So as long as we hold this week's low, we can allow for a rally to 210, 215. So make it 212 plus minus 2 for the IWM. But I do want to see a break above 197. That's the first indication we're going to go higher. Please be aware about the 202 level. We might just do a B, C, okay? So again, the small caps have already underperformed for a long time and might continue to do so. So first warning for the bulls is above, or the bears is above 197. So those are all the indexes we cover. Again, unfortunately, the 5-minute chart was correct. We didn't even get a ABC to about 16,700 for the wave 2. We're now clearly in the wave 3. Big breakout. Yes, this morning, continued rally, looks impulsive. The way we can resolve that is making a failed fifth on the hourly time frame, and it looks good here for the 345, 345. On the daily time frame, we have our upside targets with an ideal of 70,714. The third wave should ideally target, I would say, somewhere around 70,400, somewhere around there. Potentially a little bit higher, 70,600. And then we get the 4 and the 5. All right, matches quite nicely. 3, 70,645, 70,638 for 5 of 3. So that matches quite nicely. Regular NASDAQ as well is subdividing higher. Didn't really have to anymore, but it decided it wanted to. Okay, then that's what it does. And then that's what it is. That's okay. We had this potential already on the map, so no surprise. Okay, we were looking for either a B, C, a larger pullback, or the 1-2 setup with even a crash already starting very, very, very early. The market decided, nope, we're not going to do it. As shown here, we reached a 200% extension, which is typical for a red wave 5. Why? Because the third wave reached 161.8, and the fifth wave of the third wave reached 200%. So far, so good. This fourth wave went then a little too deep, well, deeper than usual. It should then have topped here at, or bottomed at 100% extension, and then rallied to 200. That would be picture perfect. No, we went to 76.4, and maybe this overreaction to the downside will cause an overreaction to the upside to kind of even things out. And please note the 200% extension of gray wave 1 measured from gray wave 2, right? There targets exactly the 238.2% extension at 15,900. So that's now our next upside target, okay? And we all know, as I pointed out, that first and foremost, today's low needs to hold. And that's the first warning below it, second warning below Thursday's low, Wednesday's low, it's a third warning, final warning, January 5th low. S&P 500, once again, 34545. We assume a standard impulse pattern until proven otherwise. I'm going to look here for about 4860 with a first warning below 4803 that we're not going to make it. Then we might see a shorter third wave and a probably extended fifth wave. Matches quite nicely with the daily chart, and the larger topping zones we're looking for anywhere between 4830 and 5026. And so far, so good. Once we've reached this level here, we can then decide, are we going to see a 4 and a 5, or was it all of the bull market? Okay, that is the question. I don't know yet. Are we going to see an even larger pullback and then still a rally? To be determined. But the higher we go, the more likely it is that we're going to see bigger and bigger pullbacks. Bigger than the one we had, by the way, in the summer into fall of last year. Okay, if we're going to see this wave 4, it's going to be bigger than this red wave 4. Okay, please keep that in mind. That's going to be quite the correction. 5026 matches really nice with 5048. So once we get into the 5000s again, please remember we're getting closer and closer for larger top brewing, potentially, okay, potentially. So make sure that you review your long-term portfolio. Semiconductors needed a tire reassessment. We should now witness red wave 5, subdivided wave 5. There were technically enough waves in place to consider 1, 2, 3, 4, all of the wave 5 complete, but we broke out. First warning below today's low, next warning below yesterday's low, third warning below Wednesday's low, final warning below the January 5th low. Okay, very simple, very simple. Use those as your appropriate stops to prevent havoc to your portfolio. IWM might have bottomed here for wave 4 and then wave 5. All right, let's review market breadth. Well, the idea here from the bullish percent index is to sell a reversal from above 70 to below 70. And that's what we got yesterday. If we would zoom in. All right, we got it and now back up. All right, doesn't work all the time. Well, that's just the way it is. Just want to point out nothing works all the time. You know what doesn't work either? Seasonality. Let's go over something that doesn't work either. Okay, nothing works all the time. Sometimes it works great. Sometimes it doesn't work great. Okay, let's go over 127 years of Dow Jones data. Give it some time to update. And there we go. So we should actually be dropping into January 2nd, 22nd, and then rally. It's not happening, is it? And okay, well, we say we're in an election year. Can we filter out election years? Sure. Then we have 32 years. We should be dropping all the way into February. No, that's not really happening, is it? So seasonality so far is not on track. Not at all, neither for election years nor for regular years. So also that one, not working. Doesn't mean it's stupid. No, it's not. It's a valuable tool, but it's not working. Neither did the bullish percent index reversal work from above 70 to below 70. The NIAT, advanced declining issues, remains a concern. We have new highs in the stock market, but no new highs in this one, even on a shorter time frame. Definitely on a long time frame. This remains a concern until proven otherwise. Bullish percent index, still no blast off, no reading above 1.75, remains also of concern for the long term. How we're doing on new lows, they're reasonably benign now for the NYSE. Still too high, way too high for the NASDAQ 100. Okay, we're in the triple digits. That's not a healthy sign. That's not what we want. We want to have a healthy bull where things are in the double digits at the best, right? At the worst, so to say. All right, how we're doing on the McClellan oscillator? No buy signal yet on this one either. We're still negative. Maybe we'll get a buy signal in a couple of days. Still negative, so can't use it for buying if this is your buy sell indicator. So this is still a rally on negative breath, but it's got to start from somewhere. And it started from quite oversold levels, right? Minus 75. Oftentimes that's a good low for a swing trade. As such, the summation index remains on a sell as well. So this one has no buy signal either. The McClellan oscillator has no buy signal. Summation index has no buy signal. The MACD has no buy signal on S&P 500. It does have on the NASDAQ and the NASDAQ 100. So again, no buy signals just yet. Okay, so from that perspective, one has to remain patient. But please remember, again, as I showed you, in May through June, we didn't have a buy signal until much higher. And then half of the rally was already behind us. It happens, okay? It really happens. Takes some time for things to catch up. How we're doing on a PMO buy all sell all indicator? No buy signal either. Interesting, huh? But price is higher, and that's why I say price is the final arbiter. Price is the final arbiter, and it is following a, so far, looking good Elliott wave impulse pattern. But we know below which levels that will start to fall apart. How we're doing on sentiment? Well, active investment managers are underexposed to the stock market, 53%. So that's not good. There's room for improvement from a contrarian point of view. However, mom and pops are still quite bullish, but it's around average. All right, nothing too crazy. 37.5 is the long-term average, I believe. So we're still well within normality. So this is quite normal. Nothing as extreme as we had here earlier in January. And we saw our small pullback. Fear greed index remains greedy. I want to see extreme greed. So overall, I think we're going to reach much higher. Oh, before I'm going to close off, let's have a quick look at our friends at ElliottWaveTrader.net. What are they seeing? I mean, there's nothing new here, honestly. And what upside targets they are looking for. Again, somewhere, as you can see here, in the 5,000 region. They potentially looking for a 3, 4, 5. That's fine as well. I'm okay with this. Will be the larger 4 and then a larger 5, as I mentioned. But looks good here, again, in this larger topping zone. Okay. And what's interesting as well, let me show you, my dear friend at Pretzel Charts has become now bullish, the bull case. Okay. So that's quite interesting. He's turning a little bit bullish. So our perma bear, no offense, is turning a little bit bullish, and that we don't know how high it can go. So that's interesting. Maybe the bears are finally throwing the towel, and then we know what's going to happen next. But again, we're looking here, also here, as you can see, for our friends at ElliottWaveTrader.net, somewhere in the 48.50s to 49.50s for a larger top. Okay. Matches quite nicely here, 48.50s to 49.50s for a larger top. All right, so that's gone for that one. Take care, trade safe, and I'll catch you all next week.